price hit 13,000 on a Zimbabwe exchange. At the same time, it was trading at roughly half that price on U.S. exchanges. Now, there's usually an arbitrage here, and so this normally happens only to countries that are fairly difficult to get into. So, for example, North Korea. But what I could do, and you can make quite a bit of money doing this, is I could buy Bitcoin in the U.S. for 6,500, and then go to Zimbabwe electronically and sell it for 13,000 and pocket the spread. And what that does is that will drive down the price of Bitcoin in Zimbabwe. It'll drive up the price of Bitcoin in the United States. And so there is this arbitrage that's happening all the time. And that's why it's impossible to find. Maybe you can find someone really dumb on the street who will sell you a Bitcoin for $1,000. There might be that sort of arbitrage, but quite unlikely. And so Bitcoin, it trades at many different prices around the world. All those prices are close to each other, assuming the free flow of capital, because there are these arbitrages where you can buy Bitcoin where it's cheaper and sell it where it's more expensive, and that sort of brings everything in line. When there's a quick market move, things can get out of line, but then the arbitrageurs come in and bring the prices back to roughly where the equilibrium is. Now, right now, Bitcoin is trading around 7,000, 7,100. It might be trading at 6,900 in some exchange in Asia, and 7,400 at some exchange in South America. And there may be capital flow reasons for this, but we know Bitcoin is worth roughly $7,000 per Bitcoin at this point. There's no single group in charge of pricing the coin. So if you ever see a crypto where there's a single group that doesn't price things transparently, like OneCoin, which we talked about, that's a signal that it could be a Ponzi or pyramid scheme. Now, let me just mention briefly, Bitcoin's price can be manipulated over short periods of time. It has a relatively small market cap. Right now, it's about 130 billion, I believe. And so you can come in with a lot of sell orders, and you can try to force the price down, maybe trigger some stops, and try to drive trigger some stop loss levels, try to drive leveraged traders out who are leveraged 10 to 1. So a 10% move in Bitcoin would mean that 100% of their capital gets blown up. They get a margin call, they get liquidated by their exchange, etc. So you can get I would say short-term price manipulation. So if you sell a lot of Bitcoin, if I go in and just keep selling, maybe shorting the futures, I can drive it down for a period of time. But then, of course, if I want to accumulate Bitcoin on that price drop that I've caused, I need to buy a lot, and that will drive the price back up. So it's not as easy as one would think. There's obviously price manipulation that happens all the time with stocks, especially penny stocks and over-the-counter stocks, OTC, BB stocks, which is one reason to avoid them. But Bitcoin it's a completely free market. So we can see things happen like they happened in March, where Bitcoin fell overnight from around 8,000 to below 4,000. Got down to, I think, I call it 3,800, 3,900, maybe lower on some other exchanges. Then you can see what happened is it's sort of normalized and come back to closer to its stock to flow pricing level, which we'll talk about in a minute. So Bitcoin can be manipulated to the extent that it's very volatile. If you come in with billions of dollars, you can move it around. But if, for example, Jeff Bezos wanted to corner the market and buy every Bitcoin that was still available, he would massively drive up the price. So it works. The manipulation works to the downside as well as to the upside. So people who are worried that, for example, the federal government could come in and just short Bitcoin futures and destroy it that way, they could do that. But what that would do is it would allow us to, I often use the analogy of a beach ball. You can push it underwater, a really big beach ball. You can try to push it underwater, make it stay underwater perhaps for a few seconds. It's going to bounce back to its equilibrium level. And so if a big government like the US government decides to drive down the price of Bitcoin, they could certainly do it over the short term. And what that would allow, it would allow people like you and me to buy Bitcoin to buy real Bitcoin at a really nice low price. So let's actually hope that happens. And the thing about people who short Bitcoin futures, like maybe a big government that doesn't like Bitcoin, any seller of a future has to cover at some point. They are natural buyers. And so there's no free lunch in this. This is a completely non-manipulated market. And the funny thing is, I often get this critique from people who are completely in favor of the current fiat currency system. So what does our current system look like? What do our quote-unquote free markets look like in America? Well, we have circuit breakers. This trading just stops when the market's down a certain percentage that's sort of arbitrarily defined. 5%, 10%, 5% overnight futures, whatever it is at this point. We get circuit breakers. We get, and then we get the biggest thing of all, obviously, is we have a central bank in the U.S., and this is happening elsewhere as well. We have a central bank that just prints new money whenever it wants and uses it to buy things, to prop up private equity groups, to prop up hedge funds, and even to buy the bonds of really junky companies buying junk bonds. So if you want to know a manipulated system, the most manipulated system in the world are the American financial markets, where you have a central bank setting interest rates fairly arbitrarily, printing new money, and using it to buy bond ETFs. This is manipulation. Bitcoin is very, very difficult to manipulate. I would say it's impossible to manipulate. It's decentralized, it's global, and it runs on its own software. There's no extraneous power that can make it go up or down for any extended period of time. Now, I want to conclude by talking about some of the value that Bitcoin does offer. And I would say we'll start with the second one, which is medium of exchange. Bitcoin is obviously very cool because you can, let's say you're escaping from China, you can convert some of your wealth, your yuan, to Bitcoin and use it to come to the US. It's very easy to send money across borders. It's very cheap to send it. If you want to send a few million or a few $1 billion overseas, you don't have to wait days. You don't have to pay SWIFT fees and wire transfer fees. And so that's very cool. The other thing is it's censorship-resistant money. You can send Bitcoin to any political group you want, any religious group you want, and it cannot be censored. So just because someone in Washington D.C. doesn't like who you're sending money to, it still cannot be stopped. Now, obviously, this means it can be used for illegal activities. I certainly don't condone drug dealing or money laundering or anything like this. But we have been entering a period where free speech is under assault in the U.S. And so I think it's important to have censorship-resistant money. Obviously, if you live in a place like Zimbabwe or Venezuela or North Korea, it's even more important to have a form of money that cannot be stopped by your government. So it's a very good medium of exchange. This is one of the functions of money. The other real function, the one I'm most excited about, is it's Bitcoin as a store of value. So one way of thinking about Bitcoin, and I talk about this in other videos that I'll link to, Bitcoin is a lot like digital gold. It's scarce, and it can be used as a hedge against inflation and central bank money printing. If you want to learn more about this, I will link to Plan B. It's at 100 trillion USD on Twitter. This guy is a very smart quant. He's an anonymous account, but he's the real deal. He knows what he's talking about. And I believe it appears he works for a pension fund in the Netherlands. So he works for a big institutional investor, and this is why he has to remain anonymous. But if you just read his material, you can tell that he is a very smart individual who understands mathematics and understands economics as well. So I will link, if you go to his Twitter account, which I'll link to, it will take you to this article, Modeling Bitcoin's Value with Scarcity. And this is really the basis for my Bitcoin hypothesis, why I think it's going to 100,000 in the next 12 to 18 months, going to 300,000 by 2024, and going to 2 or 3 million by 2028. So I'll link to this paper, very interesting paper, that talks about how Bitcoin is like gold or other precious metals, and it uses a stock-to-flow model to price Bitcoin. This is a very statistically robust way of modeling Bitcoin, And if plan B is right, and if I'm right, Bitcoin has huge, huge potential returns. Again, I'm not promising you it's going to go up 10% a month. I'm not promising you it's not going to go to zero. It certainly could go to zero. But over the next couple years, if it functions the way it has been functioning, especially against the backdrop of all the central bank money printing, Bitcoin could certainly be trading in the millions. And there's actually no limit to where Bitcoin can go. Actually, it can become like, it's like a balloon where you can just fill up. Let's imagine it as an infinitely expandable balloon where you can add as much water to it, and it will be able to take that water. It's not like a stock where it hits certain growth ceilings, or can't go above a certain PE or something like that. As a store of wealth, the amount of wealth that humanity can create going forward. Let's say I create a new vaccine for cancer, a new cure for cancer, a vaccine for the coronavirus, etc. This is creating, or I create the next light bulb and the next iPhone. This is creating wealth for humanity. And that wealth can be stored in fiat currency, and in which case it loses a little bit of money every year and gets debased, or it loses a lot of money every year if you live in Venezuela or Zimbabwe. Or this wealth can be stored in gold, in physical gold. It can be stored in real estate, or it can be stored in Bitcoin. And I would argue that Bitcoin is probably the best place to store it right now. Now, I touched on this earlier, but I just want to touch on it at the end here. There's no reward structure for recruiting new Bitcoiners. Every time one of you guys signs up for Bitcoin, I don't get paid. There's no central group controlling this. Again, it's completely decentralized. And unlike Ponzi scheme products or pyramid scheme products where you're selling, let's say you're selling beauty products or something like this in an MLM scheme where there's basically an infinite supply of beauty products they can make, or kits that they can give to you to sell. Bitcoin has a fixed supply. There are only 21 million coins. A million of those were locked up by Satoshi. A ton of them no longer move around. They're just locked up by Bitcoiners like myself in hardware wallets. It's the scarcest asset in the solar system. There are only 21 million total that will ever be made. So it's not infinite supply. You can't just print more of them as you get more customers. And so as such, it's not dependent on more recruits to prop up the price. If Bitcoin stopped growing at this point and the current Bitcoiners just used it, the price maybe would not go up, but also it would still function as a decentralized network. So when you hear Bitcoin, I want you to think network rather than pyramid or Ponzi scheme. And I think some good analogies for this are things like the telephone. So when Alexander Graham Bell invented the telephone, there was just him. Maybe he could call one of his assistants. But the more people who joined the telephone network, who got telephones and hooked them up, the more valuable this became for Ma Bell and AT&T and all the phone companies as this network grew. Very similar to the internet, when there were just a few hobbyists connected to it, didn't have a lot of value. But as all of humanity is in the process of connecting to the internet, it becomes much more valuable. And you can see this at the corporation level as well. eBay, when there were just a few buyers or sellers, didn't have a whole lot of value. But as the network grew, people went to eBay because that's where all the buyers were. People went to eBay because that's all the sellers were. And so eBay benefited from network effects in terms of its growth. And this has really been the model for a lot of Silicon Valley companies, including Facebook. The reason people are on Facebook is because other people are on Facebook, and they did a really good job of using network effects to grow and protect themselves. And so I'll close with one final argument. I often hear people say, well, I could just it's very easy to make cryptocurrencies. I can make my own Bitcoin. And so it doesn't really have value. It's not really scarce. Well, what people who say that miss out on is you can make a similar argument about Facebook. I could hire a developer to just create a new Facebook for me. The software is not that difficult, at least at a very basic level. And so then I could tell everyone, come join my social network. But because we've had these first movers like Facebook and Twitter and Instagram and YouTube and TikTok, etc., it'd be very difficult to start that off, and probably impossible. There's already a Facebook, so we don't need it. Maybe we need an Instagram or something for younger people so they don't have to be on the same network that they're